Good evening and welcome to the ShadowTrader Video Weekly for Sunday, March 18th, 2018. Title of this video this week is Mix 'em and Cook 'em in a Pot Like Gumbo. Some of you will know what that's referencing and some of you won't, but if you just want to take it literally, it means that we're sitting in a stew of conflicting signals in the market, which is causing the S&P to kind of be in a no man's land here, as you can see on the chart. What I believe is happening from a fundamental basis is there's somewhat of a push-pull between the expectation of good earnings in the first quarter and also the good earnings that we've had in 2017 and everything that's coming down the pike as far as possible rate hikes this year, of which there may be up to 4 more, and the tariff situation. That kind of weighed on the market a little bit in recent sessions. So I think these things are kind of causing this kind of push-pull. So where does this leave us now, technically? We are at about a 61.8% retracement from the high to low of the move, right? This is the move down, which is February. And then we bounce, right? And the retracement of this downward move is basically right here at 61.8. Okay, so we rallied kind of to it. Then we went above it, came into our first higher low, which set up a new rally to a higher high, which is good. And usually the pullback to support from a higher high, as long as it makes a higher high, the pullback to support is viable. So we're going to be watching that. And notice that where the market has supported right here over the course of this week, where we've pulled back to, it makes perfect sense, correct? Because where is it? It's the breakout point. Here's at the 61.8, which is where we stopped, came in, broke higher, right? And notice that when the market comes back, why does it stop here? It finds support at the exact same level at approximately the 2740 to 2745 level. Okay, so coming up this week, this is kind of a go, no go, as my mentor in the market profile, James Dalton, always likes to say. It's an important spot for the markets right at this juncture. All right. Now, even more important than what's going on in the S&P, which is also at a similar juncture, is the NDX, because the Nasdaq 100 has been stronger here. Notice that when it did the 100% retracement of the downward move, it then pulled into the higher low and did what? Made a new all-time high right in here, correct? And since then, it has pulled back to the ascending trend line. Perfect. Correct? So this is going to be kind of a key area, go, no go. Like we were saying, it's either going to find support and go early in the week, or we're going to break and possibly move lower. Now, don't forget that one of the scenarios that could be possible is that we simply consolidate by time. If the line breaks and you don't get downward movement, you just get sort of a dribble to the side, that's bullish. What that's going to do is form sort of a cup pattern that'll look like this. Okay, so be aware of that. That's the situation in the Nasdaq 100. All right, let's take a brief look at the market profile. I don't have too much to talk about there, but there are a couple of nuances I would like to point out that I think are interesting. One of the things that bodes well for the bulls here is the fact that sellers here are not very motivated. They are acting in a very, very mechanical way. And I just want to put this, I'll put this overnight action here on this week so you can see all the overnight action of the week. They are acting in a very mechanical, very visual way, the references. Notice that this area here between these 2 days formed a gap. I called that the 3839 gap because right, it's between the sessions of 38 and 39. And notice that the overnight low here between the 14th and the 15th of March was the perfect gap fill, but it doesn't count unless it happens in a RTH session, and then boom, it does the gap fill in the RTH session very perfectly, correct? And notice that here there's lack of excess, which is a poor low. It tells you that sellers are kind of painting themselves in a corner. They're not really getting anything for it. Poor low here as well the next day, and again, lack of excess here. And one could even make the argument that notice how from here to here, there's an almost perfect 45-degree line. So the 45-degree line is something that we look at usually just on an individual profile basis. But I think it's worth a mention that you have the 45-degree line. The 45-degree line, again, it's the same thing. It just tells you the sellers just kind of, they're selling a bit here, but they're not really getting anything for it. And the general trend is still moving up a bit, but they're getting themselves more and more short. So we'll see. This is going to be very, very interesting to see what happens coming in next week. So a lot of these profile references are just very, very nuanced. And it just feels like there's just a lot of, short-term trading just happening here. Notice that value has been relatively unchanged over the last 3 sessions, just slightly overlapping to up on Friday. And of course, the settlements, which are the red boxed areas, they've been almost equal. So value almost the same. The market hasn't really moved much. And that's happening where? On the heels of a downtrend. Right? One of the things that Jim Dalton, my mentor in the profile, has always taught is that markets don't go from trend to trend. They go from trend to balance back to trend. And we don't know which that is, but it's good to just know this structure and this sort of dynamic of that markets do this. Because what happens a lot of time, especially with newer traders, is that they assume always that markets go from trend to trend to trend to trend, that it's all just trend. And what happens is inside of the balance, when the market is pausing, they get very chopped up. They enter positions, the positions don't go anywhere. They enter positions thinking it's long, they get stopped out. They enter positions thinking it's short, they get stopped out, right? Because they don't understand that it's trend to balance and then back to trend, okay? Now, if you want to learn more yourself about these sort of nuances in the market, and at the very least, as I've always said, not be so surprised about what the market is doing and help you to get into trades at the right time, regardless of whether you are a day trader or not, right? I highly recommend that people attend one of Jim Dalton's intensives. So there's a second one on now, which is going to be starting in April. And the first one is already happening currently. And for a very limited time, this one is much, much cheaper. There is a $300 discount until March 28th. So that discount ends on Wednesday, March 28th. So this is really kind of a deal because normally the intensive is $12.95 and you can go for $9.95. This is 4 full weeks of every morning with Jim Dalton explaining the markets through the lens of market profile. Also a lot of writings and blogs that he comes out with during the time. It's basically like my blog, but on steroids, as I always say. So you guys should definitely check this out. The early bird special is only until March 28th. And the way you get it is that you click the buy now button here on our site at the premium services section. And when it'll take you to Jim Dalton's page, and then you have to enter this coupon code ST300M2 to get the discount. All right. Let's get into some trade ideas. I don't have too many, but they are pretty solid. Got a couple of things going on here. First one is Nvidia. And this is one I actually entered a pretty interesting spread with my weekly options advisory clientele. And I just think the stock is very bullish. It's been holding up really well. Here in the last few days when the market's been kind of softening, especially today on Friday, the market backed off a little, kind of back and forth. I mean, I know it finished, S&P's finished up about 5 points, but during the course of the day, there were multiple pullbacks. And I was noticing that when there were multiple pullbacks over the course of the day, that Nvidia didn't even budge. Like, this is what the daily chart of Nvidia looks like. And it didn't really move much as far as like coming like, below the low of the day or anything like that. So I like the prospects of Nvidia going forward. And I'll actually give you a little heads up here on what I'm doing specifically in this one. Let's see here, Nvidia. This is an interesting spread in that it's a 10 by 1 if you look at it, whereas you're buying all of these unbalanced broken wing butterflies for credit like 10 times, and you're using the proceeds to buy this straight butterfly, basically looking to get long delta in the stock by just being on a 250, 270, 290 call butterfly. And I felt that this made sense because there's still healthy credit here in the 270s. So you're basically doing a 1 by 2 because you only really need this for margin. It doesn't really increase the cost. It only increases the cost by a dime, and it doesn't mean anything. But why I think this makes sense is because look at here in Nvidia where the last move was, which was this breakout here. And give me 1 second. Which is this move here from the breakout. Meaning that when the last prior high was taken here, you had this move here. And this is about 25 points. So it made sense to me. I didn't want to add 25, I just wanted to add 20. That you could go 250 to 270, and this would be your target on the stock to go to the 270. So that's why it made sense to me to be short 2 options here, and then the +1 here. And again, because and then using this put structure to pay for it, why did I put on this unbalanced butterfly, which seems like it has a whole lot of risk, but not really? Why did I put it on where I put it on? Right, look at the strikes, 225, 220, 210, 1 by 3, correct? 225, 220, 210. And lo and behold, where's 220? Here's 220. So 220 is where? Below the trend line and at a prior support at a breakout level. And this, if it was to go down here, the duration of the trade is 2 weeks, so I doubt it. And remember, I have a long in front of a short down in here. It's not like I'm just short credit here. It's a broken wing butterfly unbalanced. So I've got 1, 3, 2, right? Down in here. So this is where this is the area that I'm using to collect my credit. All right. This is kind of esoteric, but it works. And this is very typical of the type of trading that I do in my weekly options advisory. It's a little bit esoteric. It's a little bit for more advanced people. But if you're interested in checking that out, once again, that's right at our site, Premium Services, and click on Weekly Options Advisory. Let me give you just a couple more ideas. And here's Amazon, which for the first time in a long time is pulling back. When I say first time in a long time, this is the last time Amazon pulled back, basically. Here's another pullback. I mean, look at this. This stock almost never goes down. So this was here. This is like in December. And this is like in February. And here we are in like mid-March. And maybe this is a pullback. I don't know. So possible long at the 20 MA, which is the prior breakout point, 1530 would be good. I don't think we're going down to the trend line here. But regardless, Amazon is literally just a question of drawing the channel. And then when it pops out of the channel, you got to get a spread on. So what I'm going to be doing here is obviously I hope it goes much lower. But when it pops out of the channel, I'm going to be targeting my long spread to coincide with earnings that are down here, which are going to happen in April, obviously, after Q1 ends. So just kind of an advanced heads up. That's really easy analysis. Anybody can kind of show you the same thing, but it does work. All right, Google, possible trend line support coming up. So I'm interested right here. Possibly something at the 1100 level. And last but not least, I gave you guys Wing a while ago, and Wing just took off and it looks great. And now it's consolidating again. So maybe there's something to do in Wing for the next move higher. And that's IBD 50 as well. All right, that's it. So market just kind of in a no man's land. This week is going to be very, very key. See what happens. And be safe out there. That's all I have to say. Be safe out there, right? Remember, markets don't go from trend to trend. Trend to balance, back to trend. And right now we're in balance for a few days, so probably get some trend this coming week. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.